with this conversation, we will help you to navigate Nordic venture capital landscape. So here today we have Estonian and Finland's deep tech investment titans, we might call them. So from the Estonian side, from the Spetsialist VC, we have Samela Kivilo.
Hi.
And from the Finland side, from Voima Ventures, we have Pontus Strahlman.
Nice to be here.
So we're going to kick off with strong questions to navigate this atmosphere. And we're going to see if Finland and Estonia, do they vibe the same or do they vibe differently? The first off is, when is the time to actually raise venture capital for your company? When does a startup founder realize or needs to realize that they can't do it with their own money, it's time to get an investor in?
Yeah, I don't know how if this differs too much between like Estonia and Finland, but what I pretty often have to say is like a disclaimer at that VC funding, it comes with its own specific expectations on returns, on timeline. So a really rough way to look at it is that with every like round, like we have those pre-seed, seed, Series A round, you sort of can like picture a chart that every KPI that you have, your revenue and valuation, it triples. So, and I'm saying this just to like give a picture of like what a roller coaster a VC funding path is.
Triples in a year or what period of time?
Between those funding rounds. So of course in reality what happens is that between pre-seed and seed, of course you may have some extension rounds, but roughly the main rounds, things have to triple. And why I'm saying this is that we have had instances where we are saying to the companies that why don't you keep the whole pie, the capital table, to yourself? And just build the business on a moderate pace with not too much fear and stress. So that's like a maybe disclaimer.
So I understand it only makes sense to bring in VC if you see there is a massive opportunity to really rapidly grow, and that's where VC comes in.
Exactly. I mean, VC needs to enable you to run a lot faster than you would be running without the VC money. And I'm sure that is the question every founder needs to ask themselves. Can I run a lot faster with this money? And honestly, like, ask yourself that question. And I think that will answer if you should get VC money. That doesn't yet answer if you will get VC money. But that's like the basis for any entrepreneur to decide if they should try and raise.
But by that time, they should have some kind of clients or potential clients who show that they are interested in buying that. Before that, there's too early to come to VC?
Well, it depends. In deep tech, I mean, we are solving huge problems. So does Fusion Reaction have a customer lined up paying a proof of concept fee for your startup? Certainly not. Yet there's been billions and billions being poured into developing it. So if your opportunity is big enough, then you don't necessarily need that customer money, but you need excitement from potential customers. That's really important in deep tech.
So if you're looking for deep tech companies and whether to invest into them, what are the top 3 qualities that you are looking for? So you mentioned excitement. What else would you add? Excitement from the customer side, that's what I meant.
I would add 2 more. One is this, we want to see a realistic timeline for like, or how to say, time to first revenues. So it's a bit related to what you were saying, that we would like the founders to be also like good in sales in a way that even if you do like a small proof of concept, you must be able to at least ask for some first revenues, because it's really easy to follow on with the university mindset that your project is like infinitely funded and you can just go on and on. It's coming back to the first point that I said, that investors want to see traction or like a return investment. It goes hand in hand with also like generating traction.
It has to be on a time scale, and then the investor will decide if that time scale is kind of impressing me.
Yeah, and of course in the beginning, like many, almost all like early stage like deep tech startups, they don't have revenue. But we at least want to see how the founders think about it. If we talk to them, what's their approach? What's
And
their
do
network?
they have a credible story of this fantastic unit economics and growth in the future? I mean,
What does the story mean by that? Like how it will all evolve out?
that when they talk about impact, they realize that the role of startups is to make an impact in those cases where you can get that engine of growth through profitable growth. And so you can't just talk about impact. You have to combine that with the ability to grow your company's revenues and eventually grow profitability. And the story needs to incorporate those elements. It can't just be a story about impact.
I have
Yeah.
one founder who was a scientist at first and then he developed, and one of the feedbacks he got from the investors was that don't talk about your technology, tell us about the impact of like the business sense. And for him that was a big insight, that he was focusing too much on explaining how do we make this bacteria work, but the investors wanted another story, which to me resonates. What is the story? How do you make it happen? What is the impact it will have?
Yeah.
So that's what they're interested in. Otherwise, if you talk about the technology 3 minutes in the pitch, then
I just need to add that one another really good quality is like how good of a fundraiser the founder or the co-founder or at least somebody from the founding team is, because in venture, like it's good if you can raise the money, but the thing is that probably until exit you will need to fundraise like 2-3 more times again. So it's not enough if you just let's say pitch successfully to your local founder, VC, and then get some money from the home market. So and this ability to make a good sales pitch to VCs, this is really tied to simplifying what you're saying. So as you said, in this example, like you start to go really into details like how the bacteria evolves and stuff. Like oftentimes that is not needed.
because VC, they probably don't understand that.
Your customers don't understand necessarily, and in fact, a reality check for all deep tech founders could be to tell them that your customers see like deep tech as not a red flag, but something to be cautious about. They care about the solution that you're bringing to market. They care about the financial and environmental or whatever impact that your solution is going to have. So I'd say it's wrong to say that that's what investors want to hear. That's what your customers want to hear. And I think, and I hope that we investors want to hear what your customers want to hear.
Investors want to see customers because that's where the business is, right?
Exactly.
And you mentioned a local investor. Does that mean that at first I'll have a local VC coming in, but if I really want to grow big, I'll have to eventually find investors from greater distances or from other regions?
Yeah, it's how it very typically it is that you start with local market first, because it also, I think it goes hand in hand with the financial theory, is that in early stage risk is larger, and typically when risk is larger, then you will most likely only attract like local investors, like because you can bear greater risk if it's closer to you.
Okay.
Why
is that? That's a subjective thing.
I mean, I can only explain it intuitively.
That you kind of know the market.
Yeah, imagine like being an Estonian investor or from Finland, and let's say startup from Singapore or Australia pitches you, and all the facilities, the production, everything is there. I mean, it's like even intuitively.
There's so many unknowns in investing into an unknown territory, and those are all risks that have a financial cost on you. Also, if you think about like the Andres and Horowitzes of the world, I mean, you Estonians have done a fantastic job in getting in US money, for instance. But the thing is, they have so much money, they don't care if they need to put in like 10 million or 20 million. They fear that they are betting on the wrong horse. And that's why they have the possibility to wait and see whether or not your startup will be a winner. Local investors are here to support you in that early stage, and it's great, but we don't have that luxury. You know, when a startup really skyrockets and takes off, they should go to bigger investors than your locals. And that creates a healthy dynamic where we are here to help you in the very early stages, and then you have bigger investors who really want buy-ins into the winners.
If I choose an investor, should I somehow be ready that I would have to travel every week or somewhere to meet that investor as well? Or is it okay with Zooms and other things today? I'm just thinking about the difference. Imagine if you have the American investor and you would have to fly in every month to kind of show that yes, we're actually doing stuff, versus having investor from Finland or Estonia, which is kind of closer to go. How much of that physical proximity matters nowadays?
Again, depends.
It depends. A rule of thumb I have that, okay, flying first class can kill a startup, but in general, your travel budget has very seldomly destroyed your startup. Mm-hmm. So traveling really is an essential part of building a global startup. Now, of course, you need to know your investor. Do they demand things of you that do not add value? And does that demand grow so big that it takes your focus away from what matters? Usually, investors are keen to listen because they want to grow your business as well. Sometimes, yes, you might have picked the wrong investor and your time might go to filling up forms. You need to do your proper due diligence beforehand as well.
Any advice on that due diligence side? How do I recognize that this could be the right investor? So a couple of things you mentioned, that if it's in the region, if you kind of sync with each other, that might be a good sign. Or if your early due diligence shows that it makes sense. And anything else, how does the founder recognize that this is the person I want to? It's kind of marriage, kind of ish.
It is. There are like so many parallels that you enter into a marriage contract, basically. But I would first thought that comes to my mind is maybe that it's a good sign if you can see that the VC is not like taking you for granted in the sense that you have time to fill in those Excel forms and whatnot, like 10 hours every day. So it's a really good sign if the VC doesn't overwhelm you. Of course, he or she asks the main questions that we have, everything governance, finance, and all those categories. But yeah, no like harsh bureaucracy just because of bureaucracy.
In the beginning, they probably ask really a lot of questions. Then later on, maybe not as many. So it might feel overwhelming in the beginning.
Yeah, as an investor, I always try to stay a bit humble in realizing that there is a large power imbalance quite often between startups and investors, because I have money, but I have no requirement to invest, and startup founders need money and they might run out of it. So it's easier said than done to do real due diligence of your investors, because quite often you just look for a deal, and then if you have multiple deals, you try to make the best deal. But I would encourage any founders to do some due diligence, and the easiest way to do it is look at the portfolio companies and call 1, 2, 3 of the founders. I mean, do that together with the investor, because if the investor is good, they shouldn't have any problems with you having a half an hour call with the founders in your portfolio. And I think that's an easy thing to do, and that will tell a lot of the investors. And I've done it to all of my investors. I have no idea what they've been discussing, but very seldomly has someone returned to me and said, no, I don't want your money because I talked with this founder.
Is there some kind of a non-disclosure agreement that you do with the investor that you cannot actually express your relationship with that investor if someone asks, or that's not the common practice?
It's a rare case, I mean.
That's a rare case. We do have some term sheets that we hand out with no-shop clauses, which means that we do expect the term sheet to be for at least a certain amount of time binding towards that entrepreneur and us really working towards an investment, because there's a lot of costs involved in making an investment, and and we want that term sheet already to be like the commitment that you do. So yeah, I mean, we do have no shop clauses in the term sheets, meaning that after we've like signed the agreement, both of us, and shook hands, I would expect that to be a binding agreement where we both do our very best to get to an investment.
Although even with that, you could actually sense the temperature still, if they're happy in that relationship or not. So that's something that comes. Red flags. So we mentioned what are you looking for, but what are the keywords if you see that on the investor pitch or the startup approaching you? Basically, that for you is next one, please.
It's one thing is definitely that there are some startups that it's a bit funky even to see the tech or how they talk is like when they focus too much on the valuation or they mention that we're going to build a unicorn. I mean, that's the kind of it's even funny to mention, but like it's that's
Isn't
the
that
total
what you
opposite.
want to see?
But yeah, but it's
Isn't that what you want to see?
but it's you know, life in general, you have to love what you do, and you know, the value has to come from the fact that you're putting all your focus on building a great product or service, and eventually
So maybe it's connected to the story that you mentioned, that I like your unicorn thing, but I want to see the story how you get there, not to just how we're going to be the unicorn, but what's your strategy over there?
Yeah, because if
Is
you
that
just
what you're
say
seeking
market size huge, total addressable market or whatever
Impressive
term you use,
numbers,
and we take 5% of that pie, and I mean that's great, but but how?
How is the question? It has to be convincing, right?
And I mean, I don't know if it's a red flag because it's not the line is so fluent, but I really want to see entrepreneurs who want to build businesses. And nowadays, when we are an impact investor and we want to have a large impact, and we believe that we will, but we also want to create good businesses. And unfortunately, there sometimes are these founders who perhaps a bit naively thinks that impact is the environmental impact, social impact is the only thing that matters. But that's not the case. A startup that cannot generate any revenue or any profit remains a small, insignificant company for the short remainder of its life, and it has no impact. So really, profitability and sales growth go very well hand in hand in startups. And founders who do not recognize this, but only believe that it's the impact, are unfortunately, in my view, doomed to fail.
So you're looking for impact is this thing, but it has to be coupled with the profitability. So the brilliance of an idea lies in how do you make the change and make money while doing it?
And this is like strictly from a VC perspective. Of course, there are like family funds or like more altruistic institutions
if it's
for that.
Bill
Not
Gates
just-
Foundation.
We need to do
family
that.
funds as well, that they should not invest in startups, because I believe that government will play a huge role in solving a lot of a lot of the problems that we have facing right now. But if you build a company and you limit your ways of financing that to those of a startup, you are eventually going to have to build a profitable business around it. Now then we have governments, we have fantastic organizations like the Red Cross, and you have a lot of fantastic people working passionately to create an impact in areas where no one should or will ever make money. But you should not, you should be careful at least to think that your startup is going to be one of those.
If it's the case that the founders are not able to figure out the business model, but they are bold on impact and it has to change, what is the keyword they have to Google instead of an investor, instead of a VC investor? Is it foundations? Is it?
I guess yes. It's,
But it's not my cup of tea, so I'm not an expert.
Yeah,
Certainly not mine as well,
area,
but-
To be knocking on the right door.
Yeah.
Yeah, but it's important to realize that actually rather early, not to.
Exactly.
Yeah.
Otherwise, if you get rejected from the VC, then just maybe you're
Okay.
not, you shouldn't be at the VC store.
But I assume a good VC gives the feedback. At least we do. Like if we feel that now is the right
Definitely.
time. Yeah.
And listen, in deep tech, one of the pitfalls that could happen is that whatever you're trying to solve, you just can't solve it eventually at the price that you believe that you were able to solve it. And then it might be that it's not going to be a good business. Fair enough, let's sell it off to someone who can produce it and maybe solve something, but it's not going to be like that huge unicorn that makes you happy.
Predicting those financials is something that I'm always like, how can you predict how much it will cost? How can you do the whole mathematics, the facilities, the logistics, to be able to evaluate if that's realistic, that with that price you're able to produce that? This is just gut feeling, or what is that?
Science.
Science.
It's
Critical
science.
thinking. I mean, if you get the facts from it starts with an Excel and to get the estimate correct, like how much cost can we bear? It's also really linked to like how much are you fundraising, and I mean if you're fundraising, let's say, 500k, and your monthly burn rate, which means how much money you actually deplete in 1 month, is like 100k, then you won't swim far. So,
And look, any good science starts off with a good techno-economic analysis where you assess what the possible production costs could be like, and that's just basic research. Mm-hmm. But if you neglect that part of your research, then how on earth are you able to say that in the future it's going to be a big business? But of course, we're in the risk-taking business, so I'm super comfortable in taking that risk as long as I have fantastic, smart founders who have done their research and can show a story of a good profitability.
I think calculated risk, that's the whole summary of our industry.
Calculated
risk.
Exactly.
Any other pitfalls that startup founders happen to fall in? So
Lately, I mean,
yes.
that's especially about like deep techs. What I've seen is that like now that money again has a price, like the interest rates matter, runways, they shorten up. And if a deep tech company, especially ones that don't have revenue yet, if they don't have like a clear path to profitability, or at least path to fundraising, or getting their at least some first project revenues, then it becomes like exponentially harder to raise money if you're desperate, in the sense that you're like running out of money. So I think one good way how to solve this is to have scenarios. To avoid the fact that you're simply running out of money. And lately I've seen instances, what happens when you run out of money is what investors can do is a capital restart, meaning that simply you can raise new funds, but at a really low price tag, meaning that your company, which you've built, it costs really little. All the new investors come in and basically take the whole thing. But that happens if you have nothing else to do, if you're out of money. So
when you're desperate for money, then you're too late to raise money.
Yeah. One pitfall is that you fall in love with your technology, and because you fall in love with the technology, actually what you said beforehand when we discussed is that you think that it will solve everything, and then you try to solve something that's just too little in financial terms. I mean, if you have a new technology and you try to solve a small market problem, that's sometimes difficult to assess in the beginning, and that sometimes is kind of it's a pitfall, because it's sometimes quite difficult to assess what kind of market is big enough, and really going for this 5 to 10 year journey, bringing a new technology, just solving an issue that's not big enough is I think the biggest pitfall of everyone, because you're heading on a wrong journey from the very beginning.
Yeah, and I think it goes together with the saying that fail fast, and that's not only about deep techs, that's with everything.
What about when it comes to deep tech? Let's say we have a scientist as a founder, main man or co-founder, and they are really in one specific field. But in the process, they realize we should solve the problem with a different field. So they're probably really attached to their background in the research. But if they're like the CEO or the CTO, do you see that sometimes happening, that it's so hard for them to let go and go to the other sector because all their research is in the other solution? I have to kind of find the problem to my solution.
But you said it well. Maybe that kind of a scenario in deep tech is a good place to just fail fast.
Yes.
I mean, of course, pivoting is something that you should always do. But in deep tech still the innovation is at really the core of the competitive advantage that you believe you're bringing to market. That if you realize that technology really doesn't have a competitive advantage, you should be really skeptical and ask yourself, is this really a run that I can finish, or should I fail? Of course, if you can pivot, go ahead, but be very skeptical if that's the right way to do it.
When it comes to deep tech companies, how do you as investors kind of calm yourself by realizing maybe we won't get our return in 5 or 10 years? What's your approach to that? I understand it's a bit different perspective than many other schemas where you might get money back sooner.
I think it's what calms us is that it's our fund strategy. At least for us, it's like we have a certain number of startups we want to invest in over the course of 4 years, and we know that only some of them go to deep tech, and we know that majority of them, or 90% of them, can go bust. So we have the easiest way to calm ourselves is that we knew this is going to happen.
Expecting that.
So yeah.
Yeah, I think exactly the same. I mean, expecting that many of them will fail. Also, then because we only do deep tech, we try to a bit alleviate that by doing a bit different stages. So we can do really pre-seed, we can do seed, and then we also want to do select A rounds, even perhaps like large A rounds where we see different maturity. And in that way we can then, according to our strategy, show to our LPs who believed in us and who backed us with their money that they can get returns faster.
But how do you become a person who is able to see and navigate the future? As a final question, how do you stay ahead of the curve and kind of recognize what's going to happen next? Any specific ways of approaching that?
Yeah, well, I take those food supplements, but no, I think one obvious thing is, of course, like keep your eyes open. Like I read like different newsletters and try to. Of course, I'm not like a biosciences background myself, but to read a lot is one thing, and maybe what is especially about Spetsialist VC, what is special about us is that we have we have a great network of specialists, hence the name, and we even have actually a venture partner or scientific partner, scientific advisor, Tõnu, in our team, who's like a human genomics professor. So we explicitly made the decision to have somebody from the science field in our team.
To validate.
Or at least, I mean, of course, like genomics is one small part of the whole, let's say, life sciences, and then we have loads of other verticals in the deep tech. But it's the thinking, how he evaluates things and critically assesses things. So definitely Tõnu from our team and rest of the experts. There's a lot of trust.
So special supplements and Tõnu is the key.
Yeah. But I mean, you know the Laffer curve. When you know nothing, you know that you know nothing. When you know little, you actually think you know a lot.
Yes.
And my struggle is to make sure that I don't know enough. So we have to build the networks, and we have to have an open and curious mind and validate with the ones who really are the experts.
Exactly.
Because in that sense, I think you can spot real talent, real innovation when you combine your curiosity with the humbleness to go and ask the people who really know.
Yeah.
And one final quick advice, specifically for you. If someone who happens to be watching and one day comes to pitch their idea to you, what would be one thing specifically you would recommend them if they're coming to you, that it would be a fruitful meeting?
I would just say start with the basics and be like simple enough. What I mean by this is like very often what frustrates the VC is that if you start with like vague sentences about your business, like you're kind of doing like a software, but then you solve this and like tell me, is it a platform, a marketplace, is it a device, is it a scanner? Just don't be afraid to be like to simplify things in the beginning. We can go into details. We have like we have lots of time. But to
big
get
picture in the pitch.
Yeah. Then we're on the same page because I don't know your vertical, your project as you do.
Yeah. I love entrepreneurs. And in deep tech, there's a lot of researchers and some really fantastic entrepreneurs to be had. So if you come to me and you want to see me interested, really show your passion to solving whatever you're solving, show your commitment. Really the commitment is important to solving what you're solving. And I think we will certainly have a fruitful conversation. Will it end in an investment? Who knows? But hopefully we can both get something out of that discussion.
Thank you. So for all the viewers, if you're already listing who the next investors will be to speak, this is Samela Kivilo from Spetsialist VC, and this is Pontus Strahlman from Voima Ventures. And I wish you inspiring meetings, seeing all the amazing things that companies are doing and investing to the right ones, and hopefully seeing the big impact that arises from that. Thank you.
Thank
you.